Okay, now that we know what a capital asset is, it's time to study what the capital asset scheme is when we talk about UAE VAT. Now, knowing that we have a capital assets in our hand, let's take an example of a machine. I do apologize for my poor drawing skills, which a dentist uses to examine his patient. So the patient is here, and the machine is there which he uses. It has a flexible lamp, and it has a tray for all of the how do you say, surgical equipment for the dentist to operate his patient. Now, in this example, what the dentist has is his knowledge and education, which he has acquired over the years. And this is the capital asset which he has to use to provide his services. Now, this machine may be costing 5 million or more than that, and its useful life, let us say, is more than 5 years. Now, in that case, when we look at this machine, we'll be talking about the capital asset and capital asset scheme. So, 5% of 5 million will be 250,000 dirhams. Chances are that this dentist purchased that 5 million worth of machine on installments. He hasn't paid upfront cost in cash. He took it on installments, and immediately Federal Tax Authority is coming to them, and their supplier is telling them, pay this amount. What that dentist will do, he will say, I'm sorry, I will not pay this amount immediately. Why will you not pay? Because I'm using the capital asset scheme. So, what is this scheme? What the capital asset scheme does is that you take, especially in case of commercial property, you take 100% of input VAT recovery immediately, which means that you do not pay anything to the government immediately. And over the useful life of this asset, which is maybe 5 years or 6 years, whatever, you pay over time through those input VAT adjustments. That is how the capital asset scheme helps the services sector by relieving immediate burden of input VAT payment from the consumer, who will be generating revenues over time. Now, this dentist, he will generate revenues over time as customers, actually, we should not say customers, his patients will come for their treatment. Now, a twist in the story, COVID-19 comes. I want to give a disclaimer over there, this did not happen. But what if the government said that during COVID-19, if you have patients coming in who have to get their mouths checked up, for example, to investigate and to recover their, how do you say, to check whether they have symptoms of COVID-19 and to make sure it does not spread, or to find solutions. So what the government might have done is they may ask the dentist of this equipment for that use, right? Now, if the government has asked the dentist to use their equipment for the government use, that means that giving supply to the government, you're not getting output VAT because it is an exempt supply in that case. Now, when you're talking about an exempt supply in this case scenario, you have to pay input VAT. There is no such thing as an input VAT recovery in that case scenario. And because there is no input VAT recovery, you have to pay back the remaining input VAT out of this amount. Which means that maybe you had made some, you have used this equipment through the capital asset scheme for some time, and you have utilized 150,000 dirhams already of the input VAT initially recovered, but the remaining 100,000 dirhams, to reach this figure of 250,000 dirhams, immediately you have to pay back to the Federal Tax Authority. So the capital asset scheme, what it is doing is that it is requiring the beneficiary of the capital asset scheme to pay, which obviously the beneficiary, the dentist, wanted to pay over the useful life. It is requiring him to make that payment of the initially recovered input VAT immediately. It should be adjusted. So it has to be paid back immediately rather than over time, as the capital asset scheme was earlier suggesting when his services were standard rated and not exempt due to the COVID-19 scenario.